April, May, and June, we're looking at Bitcoin held by funds. Now we're starting to see institutions get into crypto because a lot of it was retail, right? So we have just in the last month in June, we're seeing institutions buy Bitcoin like crazy. It's going up like crazy. And they now have over 848,000 Bitcoin institution on their balance sheets. So this brings me into my next point. This is one of the most critical pieces to understand in this space, is because you want to know really where the larger adoption is going to happen in crypto. And it's going to start with Bitcoin. There's currently right now a race to what's called a spot Bitcoin ETF. An ETF is an exchange traded fund. Basically, it allows an institution to buy Bitcoin and sell shares of Bitcoin like stock to companies. So companies don't have the risk of losing that Bitcoin. Now, this is going to allow companies to get into Bitcoin, pension funds, sovereign wealth funds, 401ks, all those more conservative institutions are going to start getting into Bitcoin once the spot ETF is approved. So here's where it becomes mind-blowing, is when you start to see individuals like BlackRock's Larry Fink telling us now, he was actually anti-Bitcoin before. This is the CEO of the largest asset manager in the world, BlackRock, saying that Bitcoin is an international asset. They're classifying it as an international asset and saying that cryptocurrency is like digital gold. It has never happened before, seeing big names like this talk about that. So just to put things into perspective, this is how crazy BlackRock is like a country, actually like one of the biggest countries in the world, saying that they're getting into Bitcoin. People don't understand that. The GDP of the United States is $26 trillion. BlackRock, they manage $10 trillion. That's bigger than the GDP of Japan, bigger than the GDP of Germany. Let's look at even more. So the UK, the GDP is $3 trillion. They could buy the UK 3 times over. BlackRock alone can do that. They can buy Japan twice, and they're getting into Bitcoin. And not only themselves are getting into Bitcoin, we have all of these major organizations getting into Bitcoin right now. We have ARK, BlackRock, Bitwise, VanEck, WisdomTree, Invesco and Galaxy, Fidelity, and Valkyrie, all applying for Bitcoin ETFs. Now, here's where I'm going to tie it together, where you're about to see nothing that has ever happened like this in the history of commodities ever, not even close to gold. Check this out. I did some numbers for us. So I took all these institutions and I broke down their assets under management. ARK, 50 billion, BlackRock, 10 trillion, Bitwise, 1 billion, VanEck, 55 billion, WisdomTree, 87 billion, et cetera, et cetera. Fidelity, 4.2 trillion. If I total all of these assets under management up, you get essentially $15 trillion. Now, if anybody's a trader here and you're thinking about how much you risk on an individual trade of your capital under management, a lot of us risk 1% or greater even. At a 0.5% allocation, a 0.5%, a lot of people don't even risk that little. At a 0.5% allocation of that number, that gives us $74 billion. Now let's move over to the supply of Bitcoin. There's only 21 million Bitcoin out there. Currently in circulation, we saw a lot of that is being held. There's 19 million. The liquid supply is 1.87 million. At a price of $30,000 per coin, that is $56 billion. So if you put these pieces together, which is a lot of people are not seeing this, they're saying cryptocurrency is risky, Bitcoin is risky. This seems pretty not risky right now, because you're seeing that these individuals, institutions getting into the Bitcoin space, they could, with a 0.5% of an allocation, a very conservative trade, they could buy all of the Bitcoin off the exchanges easily with a 0.5% of allocation. I know very few people who really see this and get this. And if you do, this is outrageous. Never, ever in the history of time has this happened for an asset. Okay, for time's sake, I'm going to keep rolling. So the Bitcoin halving also is on the horizon. If you don't know what the Bitcoin halving is, Every 4 years, the difficulty to mine Bitcoin, which is just processing through a mathematical equation, gets more difficult, and the reward for solving that equation cuts in half. So that essentially makes Bitcoin twice as scarce in itself. You can see the first halving, Bitcoin went up about 10,000%. Second halving went up 3,400%. Third halving went up 661%. So the fourth halving is happening right now. But one thing that's different about this halving is that supply. There will never before be such a shortage of supply. So there's something called supply shock. And I believe we're going to see something that the world has never seen before when it comes to supply shock. So if you're putting the pieces together, this gets pretty wild. It gets insanely wild. And I think it's awesome that we're part of this time. So this Bitcoin halving, a lot of people want to know when the next days or when it's going to happen. So in about 300 days, it looks like. Estimated date is May 8th, 2024. So buckle up. And again, if you look at these halvings, that's where the new all-time highs of Bitcoin typically happen. So where are we now? That's a big question you have to ask yourself. And I really like looking at cycle midpoints because, at least me personally, you want to know where the generational opportunities are for buying Bitcoin per market cycle. It's below the cycle midpoint. Any accumulation below the cycle midpoint, you're killing it. The market's typically not going to come back to that or even close. Again, a lot of us think that Bitcoin is super crazy risky, but if you zoom out and you understand risk and you understand potential, this gets crazy. Look at where everybody is. We're right at the top of that midpoint of the market cycle. That's a very, very opportune area, statistically, technically speaking. So a lot of us think that we're late. We're actually at the most opportune time to catch this next wave. All right, let's go into something that is not Bitcoin. Let's go into the altcoin space. So something incredibly powerful just happened, and I'm going to use some legal jargon or whatever they use on their report. But pragmatic sales are in the clear. In other words, exchange trading coins are in the clear. The biggest thing in the altcoin space that was a hangup was there was a lawsuit against a major altcoin called XRP, and they were touting that coin to be a security. And everybody was afraid of accumulating altcoins because of this potentially being a security. But what has now been in the clear is that exchange traded coins are now not considered securities for the time being. So it's huge, huge news for the altcoin space. So what we're seeing here is we just had a breaking news story where the judge rules that XRP is not a security in the case against Ripple. And that's if anybody, this is what we do at Driven. We've marked up the 55-cent mark for weeks on end here. And we see once that 55-cent mark was broken, we now get a near 100% move in the XRP price. But it's not just about XRP. This is about altcoins. This is giving a lot of people the clear that it's okay to actually buy cryptocurrency on exchanges that aren't Bitcoin. So Coinbase just listed XRP. A lot of these altcoins that were considered securities are now going to be listed again on exchanges. So the final thing I'm going to bring up is really where I see the future of cryptocurrency, and a lot of other people do as well, including BlackRock. And this is the tokenized asset space. So what I want you to think of what cryptocurrency can do, cryptocurrency allows a efficient means of transferring value. We've seen this in the digital space, right? We can transfer digital art. We can make digital property. Say you have like a gun you use in a video game. I can now create an NFT and sell that to you. I can sell you the digital rights to that piece of equipment. Or it could be digital rights to a 3D model. But what tokenized assets are is doing the same thing to the physical world, which is insane because the asset space, right? That's everything. You're talking land, you're talking real estate, you're talking commodities. Cryptocurrency can increase the efficiency of actually being able to own and transfer these assets because of NFTs, because of cryptocurrencies. So it's not even myself. That same guy, the guy who's essentially managing multiple countries worth of money, is saying that the next generation for the market is tokens, is the tokenized asset space. And the tokenization of illiquid assets is expected to reach $16 trillion. So there's a report by